Hey everyone, I hope you're having an absolutely incredible trading week thus far. It's been quite an interesting week for a lot of us. I'm finding I'm receiving a lot of messages throughout the community, whether it be those that are continuously smashing their limiting beliefs through structured higher time frame methodology and analysis, which will of course always be a prejudice of patience, whilst I'm also seeing some absolutely incredible and insane results on the flip side for those of you that are really diving in and have been diving into the lower time frame with the help and oversight of both Sketchy and Albi. Now, of course, we do have some pretty incredible news that is yet to be fully announced formally across one of my videos at least. So the first of two great, incredible pieces of news is that the Phantom team has grown by one more, which is Wise Jr. So little Oliver, Oliver Wise, who was welcomed into this world last week, and of course, naturally, he is going to be an incredible addition to our team. So if you feel that you need any coaching sessions, please feel free to hit Wise Jr. up. But I'd say give him a couple of weeks to let him kind of sink his teeth into the world of the financial markets. The second piece of incredible news is we have as well increased our team again by bringing on board Samadhi FX. Now, most of you will be well aware of him throughout the community. He is genuinely an incredible human being, and he's an exceptional trader. Of course, he is predominantly going to be focusing on and primarily focusing on our Italian arm of Phantom, but he will be overseeing and assisting the community as well within the main hub of Phantom. I'd also like to move on to the topic of really resonating and reminding individuals that each and every one of us are on our own journey. There's over 1,000 individuals within this community, and each and every single one of you will get to where you want to get to if you continue to put the hard work in. There's something that I have on my wall that is the 3 words: never ever stop. Don't look at other individuals within the community and believe they are a greater part of their trading journey or they're further along than you. However, also take that into consideration that they may have well been in the financial markets either for a lot less time than you or a lot longer than you, and this style of trading has resonated with a pre-existing trading methodology that they used to trade alongside or with. Alternatively, just be completely grateful and in abundance for them. Remember that those individuals within our community have the ability to help you, take away any kind of niches or areas that are underserved by you, and truly give you the ability to take your trading to the next level. And I know it's a cliche that we use quite a lot here in Phantom, but never ever compare your own journey to those that you're surrounded by. Remember that the majority of the Phantom team have come from all different walks of life. Some of us have been in the markets for several years. Some of us have only been in the market for a year or two. And each and every one of us brings ample experience and wealth of knowledge to the community in different ways, in different movements. And I do genuinely believe that you're surrounded by probably the best trading team, let alone trading community, to make sure that you are in the best place to become a consistently profitable trader. Whether that be trading your own PA account, whether you're looking for funding through one of these digital funding platforms, be it FTMO, Funding Talent, CTI, the 5%ers, the Funding Trader and all of this. Or whether it actually be that you're seeking real serious AUM investment from private individuals that are looking to allocate their funds into a single or multi-family office. Maybe you're even looking to seek FCA regulation, and this will be one of your active trading strategies alongside maybe a more semi-active or fully passive investment vehicle through index funds, investment ISAs and the likes, maybe even equities or even digital cryptocurrencies. But without further ado, I'm going to be diving into the markets for the remaining part of this trading week. This particular commentary is going to be focusing on higher time frame areas and zones, giving you the ability to understand how we're going to continue to move through the phase one of looking at swing trades within the Phantom methodology. Now, bear in mind, I do trade both higher time frame swings, and of course I still do trade London session and New York session as well. I have started to refine my trading ever so slightly to make sure that I continuously adapt and evolve with traditional and typical market conditions and alongside our team and community, because as we move and develop, yes, Brad and I will start to really seriously kick up the coaching on our own parts to ensure that you get the ability to work with us as well. And I want to make sure that I am fully equipped with the armory and the correct weapons to answer any questions, guide you through any of your queries, and really help you to transition through the market transition through the different market dimensions and build up a true framework so that you genuinely are moving forward in a positive manner and get the best and every ounce of value from the coaching calls that we do as a community, whether it be myself, whether it be Wise, Blackwatch, or any other member of the team. But without further ado, let's dive into the charts. Starting out, we're taking a quick look at the DXY. You can see quite clearly that on the weekly and the daily, we're inside this higher time frame range, so price containment. Since market created this higher high, we did then go down to break this structural low, thus creating a lower low on the swing. Price ever since has been contained inside these levels. Obviously for us, we need to take into consideration the exhaustion of price that gives us the ability to really see and understand where the liquidity is being built on the way up. And of course, hence why we have swept the liquidity from either side of this play, because you would have had several different types of traders running around looking for different trend breaks and continuations or resistance shorts, support longs, and vice versa. But the main piece of criteria that we do need to kind of pay attention to is the failure of the swing. We were trying to attempt to take out these highs up around that 104 handle, but we failed to do so, putting in and printing in a lower high quite hard, and we've fallen away. Now, at the moment, we're yet to break this lower low down at that 8800 handle or the 88.00 level, showing that we are continuously in this sideways price action or this sideways range. Doesn't necessarily mean that we haven't actually been able to take advantage of any risk on currency strength like GBP, like AUD, like Euro, and of course inversely any dollar weakness, as we've seen, and you can see quite clearly on the daily time frame of the DXY that there have been several opportunities to take it short, and you'll also see that we had a really nice opportunity to get long in and around this demand zone from the previous kind of demand era back in 2018. Will it hold? Will it allow price to continue to push higher? Yet is to kind of be confirmed. You will notice that we rejected off of this supply zone and we're starting to push lower. One thing to note, we are still bullish on this move. This is a short-term bullish trend, but it can still continue. But how do we kind of identify that? And it's primarily because we're making swing high, swing low, swing high, and based on expectational order flow, the way you'd like to see this market now kind of move is basically pulling back into the extremity of this leg, then looking to go on to create a higher high. If we do actually come down to break this leg, doesn't necessarily mean we're going to start to look for continuation shorts or plays to the downside. If you are short from this liquidity wick, then yeah, stay short, see if we can run these lows. But if we do break this swing low aggressively, doesn't necessarily mean I'm going to be looking for shorts. What I'd like to see is a successful retrace back into this liquidity area, and then ideally another break to the downside. So I'd like to look ideally for a double boss confirmation entry, which will give us a sign and it will show us true change of character. And that's ideally what we're looking for. We're not necessarily looking for singular breaks of structure that create that premature fear and emotive state of mind where we need to take action. We want to kind of take the markets in our stride, be patient, let the markets develop, and ultimately give yourself the best opportunity at making sure the market's giving you the highest probable setup. Yes, Single breaks of structure do allow us to get in higher probable setups if they're continuation plays. But if we do come to an area inside a range or that's providing us with a counter trend play, we just need to be that little bit more patient in order for the market to really show its hands, and again, give ourselves the best opportunity at taking a higher probable trade that could quite easily come against us. So just to kind of zoom out and recap, we're inside this higher time frame range. We do have a lot of liquidity that's been built to the upside. Yep, so realistically, I am still looking for longs in the dollar index, but it wasn't, it was hard not to take note of this liquidity wick with this sell side liquidity and supply zone being put here. So if you are short the DXY, then obviously longer term, monitor how price action continues, but just bear in mind that most recently from here, price action is bullish. So based on expectational order flow, we're expecting higher highs to be printed on dollar-based pairs and the dollar index itself. Just to recap on that, dollar-based pairs. So we're looking at Euro USD, so Euro should be coming off. GBP against USD, so cable should be coming off, i.e. GBP to the downside, Euro to the downside, and so on and so forth. So inversely, what we're looking for is the US dollar to strengthen and move higher. So in turn, we're buying the dollar, selling risk. But let's move on to the next currency pair for actual trading activity for the remaining part of this week. So moving on to our first risk pair that inversely looks at what we were talking about just a moment ago with the US dollar. If we actually don't necessarily take into consideration currency correlations, but we do take into consideration the dollar index itself, the DXY, if we look at what Aussie dollar's now currently doing, you'll see that it recently broke on the 4-hour time frame this area of interest that I was actually quite keen on looking for longs from. However, it has invalidated the zone that I was looking at. It didn't give me what I was looking for, thus I'm no longer interested in taking this trade at this moment in time. I do now genuinely believe and foresee that the market is looking to come down to these lower areas of demand, where ideally I'm going to be looking for possible long entries to take it back up to originally around this kind of 7,700 handle, this 7,750 level, where there is clearly some liquidity and some supply that's been induced and built up over the period of time. You can see that we've got these equal highs that were swept, you've got these equal highs swept, and you've pretty much got just this area of inefficiency in pricing and imbalance all the way up. Most other areas have been mitigated and they're no longer realistically holding any great weight in. But a couple of higher levels, if we do get into in and around this area and I don't actually get, be it a short-term short or even an opportunity to take a longer-term play, and we do blast through this level pushing up towards that big 80 handle, we are looking to, of course, take out the liquidity that's sitting up in and around this region here and hopefully tapping into this big area of structure. But if we just take a step back and zoom out and see what the bigger picture's doing, we've got bullish market, higher highs have been printed. We did just take out this swing low, but at the moment, false price action, false break to the downside. We swept all of that liquidity that was sitting under these relative equal lows and then this trendline liquidity that was built just here. Brad's been playing around with the colours again. We then just kind of pushed up to the upside and we've started to create that intermediary tonality of bullish tendency. So we've got no real break of structure, equal highs created, successful retrace, dropped more liquidity, pushed to the upside, took that liquidity out, successful retrace, mitigating the EQ of this leg in this range here, pushing to the upside, taking out this liquidity, and again creating a higher high on this swing here. So expectational order flow, we were of course looking for a higher low to be printed, but we have actually broken to the downside, taking out that swing low, which if we look and take into consideration a few of the previous commentaries that we've covered, and Blackwatch will cover in this midweek commentary as well, is we've seen similarities across cable and other risk currency pairs as well as the Aussie dollar, where markets broken down, created a successful retrace, continued to the downside. And you're not wrong for looking for longs in and around this area. But you must be mindful of and remember that we're starting to break down. Where have we come from? We've come from this huge move to the upside, pushing down, pull back, another successful break of structure. Then we created this complex pullback, taking out the liquidity from this range and filling and mitigating this area of supply here. And again, push to the downside, breaking this structure. We are still contained in this overall range, but a lot of momentum to the downside has gathered. So at the moment, we could just be coming back down to test this region here, where we do have a nice 4-hour and 1-hour demand area, or demand zone, that we will of course be looking for a test of, and ideally a double boss confirmation entry to get long, or at least a higher time frame breaker structure on the 15-minute or 5-minute, and then we'll of course be looking for a single boss confirmation entry. But for me, I will rarely take a trade off of a single boss. I'll always look for a double boss. Yes, in turn, it does mean that I miss more trades. And don't get me wrong, I do see them go, and I see some of this community smash those single bosses. And I sit there and think, firstly, well done. And secondly, is it going to come back for me? But I never chase a trade. If I see another opportunity on a continuation play on a lower time frame, I'll get involved. And yeah, again, realistically, I'll always look for a double boss confirmation entry. But if it's a continuation play, I am more likely to take a single boss continuation break than a double boss, just because we're falling in line with pro trend rather than counter trend. Now, referring back to this, if we kind of tap into this demand zone, I am going to be looking for longs. If it breaks to the downside and doesn't actually give me that entry model, then I'd consider that zone, that demand area, invalidated, and just as a liquidity kind of seek, a void. And I'll be, of course, looking for continuations to the downside, looking ideally to kind of come down into this higher time frame zone where big demand sits up and around that kind of spot 71.5 handle down to the spot 70 handle as well. But if we just kind of focus on where we are, if we do hold this level, then we'll be looking for longs. First targets will be in and around this 77.50 level, and ideally we're going to continue to hold that trade, risk off the table, and only balanced partials remaining, looking to hold up to that spot 80 level as well. Moving down into the 1-hour time frame, you'll see that we've created all of that inducement of liquidity. We've swept that liquidity, and we're starting to create new lower highs on these swings. So we've created a high, lower high, lower high, lower high, and we're just consecutively breaking down this liquidity in these lows. So it is yet to be said. I do genuinely think this box has now been invalidated. It's become void. So of course I'm looking to get long in and around this zone here, as we do still have a fair amount of inefficiency and imbalance sitting to the left. And it is that last structural swing low where liquidity and the origin of the move kind of created or came from. So for now, I'm sitting on my hands, maybe on the lower time frame. If I'm available, I will be looking for a hedge trade into this zone. So I'll be looking for shorts into this level, and then I'll be looking to move risk to break even, running the balance. If we do break the lows of this void in this demand zone, and of course I'll be running in profit and holding the balance of that trade with no risk on the table other than spread based on latency and slippage. If we do get the entry model I'm looking for, which again, double boss confirmation entry, then the balance will either be getting taken out at break even, or I'll be looking to, of course, crystallize that profit at the best available execution point whilst holding the longs again to infinity and beyond, basically, until the market tells me otherwise. But bearing in mind, I'm looking at dollar strength. I'm expecting Australian weakness, so Aussie dollar weakness, US dollar strength. But we have to let the market show its hands in order for us to actually take that into consideration. I don't trade London session or New York session on any other pair other than Fibre. I did used to trade it on Cable and Guppy, and I will realistically be reopening that up again in the course of maybe the next 3 to 6 months. But with the amount of back-end administration work we have as a community and as a team, especially whilst Mr. Wise, the legend, is away. There's only so much the remaining team can do. So of course we're trying to trade with logic, trying to make sure that we only focus on the higher probable setups and areas and greater areas of demand and supply. So we've limited our focus specifically on London session and New York session to 1 or 2 pairs only. And of course the swing pairs and the higher time frame swing trades that we look for and allocate our capital to come more progressively over the week as it develops. But remember to continue to evolve. Take your time in your trading journey. Don't worry about what everyone else is doing, whether they're smashing 10, 20, 30, 40, 50R in a day, a week, a month. Just focus on what you're doing. Focus on delivering a positive return month on month, Q on Q, year on year. Just remember where you've come from, be that other communities, be that state of mind, be that times in your life, be it financial, physical, mentally, psychologically, and just remember where you are right now. Because where you are right now, I can guarantee and assure you, with the help and assistance of Phantom and your own work ethic, you're a lot further along than you ever expected yourself to be. You may not necessarily be where you want to be, but you're getting there. So look, let's move on to the next currency pair for the remaining part of the trading week. Moving into Kiwi dollar, another risk-off currency play that we're currently looking at. So dollar strength, NZD weakness is realistically the formality that we're seeing, in line with Aussie dollar USD and all of pretty much the majority of risk plays that we're looking at, or most of our watch lists contain. We are contained in this range, so to speak. Obviously we've got the swing low here, swing high here. If we just kind of whack the P&D fib on, you can see that we've just started to move into the discount of the premium and discount. For those of you that are new to the community, this is the premium, this is the discount. We want to be shorting in the premium. Ideally, we want to be longing or going long in the discount area. So discount equals plus, premium equals minus. If you're buying in the premium, you're getting it at a worse opportunity. So you tend to find your low valid opportunities in and around this area. And in turn, you'll find your high probability setups in and around here. So price is starting to enter into the discount zone. If we look at main kind of ways that I trade and the attributes behind them, I always look for trades around the extremities of these moves, the extremities of these legs. I can't really see anything too clear on the daily time frame in and around this area, which does potentially suggest that there could be something on the lower time frame that I need to refine down to. But just remember, we don't always want to over refine. However, that being said, where are we coming from? Where's price delivery physically at this moment in time coming from? So you'll see that we've started to break down in price. We created that move to the downside. We swept all of that trendline liquidity that was being built. We created a successful retrace. We then broke structure again to the downside. So for me now, at this moment in time, whilst we're still long on the higher time frame, I am looking for shorts on the 4 hour and below. So I want ideally price to come in back into this area here. Yes, it was a real nice clean break to the downside. We do have imbalance. Doesn't necessarily mean it's the highest probable setup in the world. But it is something that if I do get that kind of move in, I then get that initial break of structure to the downside, come back to mitigate that area, then a second break of structure. Ideally, I'm going to be looking to get short after that double boss in around this area to take price to the downside to kind of come back down to the extremity of the leg. I could really be wrong, and this could actually be now the change of character and push up for the reversal, getting shorts trapped, and then all we do is we just push back up to the upside. Bearing in mind, we are starting to breach into that discount zone. Based on expectational order flow, we're looking now for prices to come back out and take out those equal highs. And of course, create a higher high, like so. And of course, being in and around this zone, we're starting to get that higher probable long setup and opportunity. But I would like price to come down deeper, ideally into the extremity. You know, we've got this kind of trend line range here. Ideally, I'd like to kind of push into this area here and look for the EQ of this range and start to look for a play off of that area before getting long. Let's move down into the 4 hour, just because price becomes a little bit clearer. You'll start to see that we've got this 4 hour counter trend zone, nice demand area, but we have this liquidity sitting below it. So for me, there is the opportunity that market could come in and just rip to the upside. However, with the liquidity sitting quite a breadth here, realistically, we're going to get a break to the upside, get the buyers in the market, induce all of the liquidity for further upside moves, and then we're going to come down, sweep all of the liquidity that's just been created, take out that existing liquidity that was already printed in the market. We'll then get an initial reaction. We'll then come back to fill that liquidity, break again, and then we'll start moving to the upside. And that way, what we've done, not us directly, not anyone directly, what we've done is we've trapped buyers in here, taken them out. We've trapped sellers in here, taken them out. And of course, that's fueling higher prices. That was the original test to clear out liquidity. We've then broken down that test of liquidity, inducing further liquidity on the short side. We've then created that initial reaction, which is one of the kind of more prominent plays that several of the community do, where they'll look for that sweep of liquidity. Initial reaction. Pull back to mitigate that liquidity that was left. Break of structure, mitigate the additional liquidity that was left. Get long, move to the upside. So the counter trend play is still valuable and it is still valid, bearing in mind it's just about in that discount zone from that huge daily leg. But it is something that is counter trend considering where we've actually come from. You know, we've broken down. The real break of structure came from this leg here. This impulsive move to the downside broke structure. Correctively moved back. Tested the distal of this supply zone. Pushed down. Broken no real legs of structure, but kind of taken out that trendline liquidity. Arcing motion. Pushed back up. Taken out the EQ of that leg. And then started to move to the downside. And of course, in the breadth of that, we've then in turn created this kind of range. And we've got that 4 hour supply zone interest, an area there that we'll be looking for. So nice supply zone that we'll be looking for shorts from if we do get that kind of complex pullback in and around. But again, just because price gets inside this area, we're not looking to take a risk entry. Some of you may well be, but ideally we're going to be looking for the market to kind of create that narrative and build the model that we're looking for and then get in. We may not be the first into the trade. You know, we may get something like this. First break of structure, second break of structure, and then get in and around this area. Bearing in mind the zone was up here, and if you took a risk entry, or at least maybe the single boss structure, you'd have got in here. But that one break of structure after this huge push up to the upside doesn't show a change of character, because what it could quite easily have done after that first break of structure, induced that selling liquidity into the market, then pushed back to the upside, creating a higher high based on the expectation order flow of that leg. So you just need to be a little bit more patient. And sometimes being a little bit more patient, yes, it does mean in turn you're going to miss more trades, but it also means you're putting yourself in the best opportunity to take those higher probable setups and the high valid setups rather than those low valid setups that we see so many individuals within the community taking. I've also been kind of accustomed to that in my time. In November last year, I got massively caught up on the wrong side of the market, primarily taking counter trend plays. And again, I touch upon this like a broken record. Counter trend plays are easier to spot, harder to trade. And pro trend trades are harder to spot and easier to trade. So just write that down if you haven't wrote it down already. Embed it in your psychology, in your subconscious and your conscious mindset. Whack it in your trading plan. You know, taking pro trend trades are the higher probable setups. Yes, they're harder to spot, but they're easier to trade, and vice versa. Counter trend trades are easier to spot and harder to trade. The reason is because those counter trend plays are usually trying to pick the bottoms or call the tops. So you just need to understand that it's very hard to do that. You just need to make sure that when you do, you have the right model and all of the other confluence and all of the other confluence elements within our strategy alongside that to attribute to making sure that you have taking a trade that matches all of your plan rules, so that if you do take a loss, you know it's just based on probability and overall edge. So just looking at this counter trend play, like I said, there is still the opportunity to get long from in and around this area, but ideally we're going to be looking for shorts from in and around this area here. You know, we could maybe get a move back up to here because we've got those equal highs. We do have that kind of nice range, that zone sitting up there for supply side liquidity, and we do have a small amount of imbalance left. We could even potentially be moving back up to the extremity of that leg, which is my preferred play. But sometimes we don't get there, so we have to play everything that's given to us. If market moves there, if market moves here, or alternatively if market moves all the way back up. But one question we'll need to ask ourselves, if the market's got to move from here to here, are we prepared to wait for price to move from, you know, spot 70 all the way up to spot 74.60, which is 450, 460 pips? Why can't we look for opportunities that are pro-trend to take full advantage and exploit those long opportunities? And that's where realistically you're going to be looking for continuation plays. And those continuation plays are going to come in the form of, you know, ranges, breaks of structure, pull back in to mitigate that range where there's a nice demand zone, decent area of interest, a nice POI sitting at the bottom of that extremity of that range. Then we'll be looking for that model to get in, and then we'll be looking for that push to the upside. There is ample opportunities in this market across higher time frame and lower time frame. We do just need to be patient and let the market show its hand. We don't just want to jump in on every low valid and high valid setup. We want to make sure that we're giving ourselves the best opportunity, and I repeat it again and again and time over, to take those high valid setups and put ourselves in the best opportunity to exploit those trades when they come about. Sometimes it can just be bad luck. It can just be the edge and the overall strike rate playing out based on probabilities. But it is something that through case studies, back testing, overall community support and team mentoring and support, slowly you'll be able to reduce those trades from your trading armory whilst focusing primarily on those high valid setups without getting too caught up in counter trend plays, or knowing when to take a counter trend play and when not to, based on price action, overall structure development, overall liquidity plays, and of course the model of getting in, which realistically on a counter trend play, just to remind you once again and let that sink in, you're going to be looking for a double boss confirmation to get long or short on counter trend moves. Let's move on to the final pair for this week's midweek market commentary. Moving into the final pair for this midweek market commentary is Kiwi CAD. It's something that many of us realistically won't trade, primarily because it is a little bit more of a minor pair, and of course the spreads can be quite erratic. However, if we kind of just focus on a few things that I was touching upon in the last segment, which is around taking trades ideally within the discount range when you're looking for longs, and ideally not necessarily taking those trades long in the premium area, just because of course you look for suboptimal or low valid trades. You can see that within the overall leg, you know, we are in the premium of this huge leg range. But there were still some decent trades and valid longs that we took advantage of. But what you will actually take into consideration and notice as well is the leg was there, and we were looking, of course, trading into the discount of this range. We did get down and push into that extremity of that play before pushing to the upside. One thing to note, that we did fail to break that structural swing higher here, and this is where realistically we started to think that market could come back down to test this, pushing down to break all of the liquidity and the lows that have been created and pushed into the market. But we pulled back, successful retrace, then pushed up again. So on expectation and order flow, we are of course looking for higher highs to be printed into the market. But one thing to note is this boss was taking out all of that liquidity from the left. We had that nice sweep, real nice kind of taking out all of that liquidity that was left here. And of course overall failing to break that structural swing high and pushing to the upside, we then broke down. So this was just primarily us taking a deeper dive into premium and discount, bearing in mind that if we look at the complete leg of the origin of the move, where the base came from, it was in the premium of that range. And I'll just quickly highlight it to be a little bit clearer. We was in the premium of that range when we were looking for longs. But if we just kind of factor in where we are in the grand scheme, we had that successful retrace pullback that fueled that move to the upside, breaking that leg. Your low on structural terms is then drawn here, with the high being here, and then you're looking at trading the extremity of this range, so the extremity of all of this here. So ideally after this break, you're looking for market to pull back into a nice demand area, demand zone, and of course you're looking for, again, ideally a double boss confirmation entry, and you're looking to get long off of the back of it, which you can see here. Played out quite nicely, just for around kind of like 30 to 40 R, depending on your overall trade. If you held full risk on that trade, I think it was around 55 R, just under. So what are we looking at now? Again, we are looking at two risk currencies. So we're looking at Kiwi and the CAD, both underlying commodity pairs for those of you that are unaware of what Kiwi and CAD is. So NZD is New Zealand dollar, CAD is obviously Canadian dollar as well. So breaking down, pullback, breakdown, created this range, and we're now correctively pulling back. So complex pullback, there could be a nice hedge into this long area. Now, of course, pro trend based on this leg, overall counter trend. But if price does want to kind of get back up to this level, then I will be looking for a short hedge into this long. Now ideally I want to be looking for longs in and around this nice demand area here. Really nice move. In terms of breaks of structure, it didn't do much. You know, we broke this structure very correctively. We pulled back to some decisional liquidity sitting inside this leg here. We then went on to break further structure to the upside, and ultimately creating true breaks of structure for here, and of course going on to create high highs from this swing and this leg. Overall, you know, we did break that structural liquidity to the left. We failed to, of course, break true range inside of type, go up to create higher highs. But overall, really nice plays, and that's why I'm looking for longs in and around this region. If we do get that kind of full body candle closing below, then I will consider this demand zone invalidated. I won't necessarily be looking to take a long. You know, we may of course want to be sweeping that liquidity to the left here. So once we've taken that liquidity, yes, this demand zone will be invalidated. However, I'll be looking to see how the price action reacts off of it. If I then get a nice model, a nice liquidity play, and I'll get that initial bullish reaction like this, then I will be looking to see overall how the market then moves on a lower time frame to get long. But ultimately, if we do invalidate that box and we don't get a reaction, then I'll be looking for lower prices and of course continuations to the downside, looking for ideally those shorts, which if we do get that complex pullback to tap into this range that we've got here, and to mitigate that nice supply zone and of course that last area of interest, you know, buy before the sell, breaking down. It's not really broken any true structure. We've got this kind of substructure break here that's just about broken. And what have we done? We've immediately reversed and we're complex pulling back into this area here. I will of course be looking to get short here, and again, as price enters into this demand zone, I will of course be looking to take a lot of the liquidity and balance off of the table, crystallizing a lot of that profit, moving stop to break even, so taking risk off of the table, and then I'll be looking to how I can play along from this area here. But if we do continue to the downside, that short hedge trade in line with this kind of descending move to the downside, this bearish leg, will of course be in my favor, and I'll be looking to of course take out the liquidity here, and maybe tapping into the liquidity that sits inside this wick, because as we break down into the time frames, it will become a lot clearer just how much liquidity and what activity is going on inside that leg. So let's move down into the 4 hour and just kind of get a little bit more refinement on what we're currently seeing. So if we refine that 4 hour to here, we take the consideration that last buy before the sell, we've got that nice area here. We do, of course, have the EQ of the range sitting at around that distal of that spot 89.66 handle. Realistically, based on psychology and sentiment, we could even be trying to invalidate this area, pushing up towards the proximal of this range, tapping into that spot 90 handle. Why? It's a big round number. Psychologically, a lot of liquidity is sitting in and around that big round number of spot 90. So we may even get something like this. We'll get a sweep of liquidity tapping into spot 90, induce buyers into the market, retrace, stop buyers, range, create a double break of structure, and then of course that push to the downside will come. Kind of moving down here to the left, you know, that huge area of liquidity that we were targeting. We've got sells before the buyers. This range is yet to be mitigated. We've come back to the distal and pushed up to the upside. And if we come down all the way to the left and start to see if there's any kind of clarity in this leg, we're not seeing anything at the moment. Still pretty wicky. You know, majority of this is efficient. It's been mitigated, efficient, mitigated, and so on. We've got a little bit of liquidity sitting in and around here, so we could mark that up. That was awful. Don't know what I did there. Just picked the wrong tool. You know, we've got that leg there that we could see price push down to. Hasn't been mitigated from what I can see. But overall, you can see, you know, pushing down to the downside is really clear. We do obviously have some liquidity, which may mean that actually we could take out these equal highs here, or relative equal highs, to tap into the kind of sell side liquidity that rests inside these candles on the way down. This one here and this one here. But that one's fairly efficient, but it is still a potential area of interest. This one, of course, does look more prominent, sits above those relative equal highs, just above that big spot 90 round number handle, you know, spot 90.61. Gives us the opportunity maybe even to spot 91, tap into that big round number up there before falling further to the downside and, of course, creating lower lows on the swing. Moving into the 1 hour time frame, I just want to see if there is anything in this wick to the left, that lower side. It's fairly efficient. There is a little bit of liquidity here. You know, that created that move to the upside that broke all of that structure to the left. Took out that liquidity in the descending trend line that we had there. But ultimately, it's all fairly efficient. So kind of move back out to the 4 hour. It's a bit messy on the old eyes. You know, so for me, just to recap, what am I looking at? First of all, I'm looking at shorts and the way the price action moves up into here. I am realistically going to be looking for a hedge on the lower time frame. So look for a counter trend long or a pro trend long on the lower time frames to get long. So ideally, want to see some liquidity being created on the way up. Want to see some decent areas of breaks, retests, so obviously I can play in line with pro trend. If we get a nice range, then of course I'll be looking for mitigation of that range and the cause of that range to be pushing to the upside. But as we get into this level, I'll be looking for shorts, and as we push to the downside, if this level fails to hold and that area of demand becomes invalidated, I will of course be looking for shorts to the downside. One thing to note as a side note, again, if we do get a sweep of liquidity, an initial reaction showing that there is potential moves for higher prices, then of course I will be looking to get long in line with that kind of sweep of liquidity after that initial reaction. And we must get that initial reaction after that sweep of liquidity to be deeming this as a probable long entry. So ideally we need to get the initial reaction here suggesting that price is actually just reacting from that sweep of liquidity that was dropped in the candlestick before. So yeah, just kind of watch what price is doing over the next 2 trading days heading into next week. Just remain patient, wait for the higher time frames to fall in line, and then look to wait for that model to kind of play out on the lower time frames and then execute without hesitation. But I hope you all enjoy the rest of your trading week. Feel free to reach out to me in DMs with any questions or queries you have. Please just bear with me whilst I am primarily on my own in the duo of Brad and myself. But of course, the majority of the team are assisting and on hand 24/8 to help with anything that you require. But if you do need anything and you haven't got a response, just please be patient. 99.9% of the time I see everything. But of course, I don't necessarily have the ability or time to react or action it immediately, be it because I'm in the middle of a trading session or I'm also doing other back-end administration duties as well. And of course, supporting the community on a day-to-day basis. But overall, I hope every single one of you are enjoying your journey with Inside Phantom. And I hope every single one of you are finding my communication, my quality of content, my commentaries, and my overall support, both in DMs and within the community, extremely helpful. And I hope that it really does help you guys and girls to take your trading to the next level. But enjoy the rest of your trading week, trade safe, and smash that R.